Hello everyone, welcome to the Trendline Investor channel. So in today's video, we're going to look at a very interesting space, the air cooler space. Now, all of us know what an air cooler is, especially given the increasing temperatures in India every summer. In fact, the temperatures have already started rising from the last month itself, and we all can already feel the heat. But there is this segment which can benefit immensely from this increasing temperatures every year after year. I know it's not a good thing to happen, but there is this company which I'm going to talk about today, which is looking really good in terms of fundamentals and in terms of technicals, and that's why I'm going to talk about this segment today. So before I get into more details, if you haven't liked my channel, go ahead and like it and subscribe to my channel as well. And if you've been my follower for some time, share this video with your friends. So there are two primary reasons why I'm discussing this segment today and this company itself. So first is the increasing temperatures every year. Year after year, we're just seeing a steady increase in temperatures because of global warming or whatever reason that is. That's one of the primary reasons we're looking at this segment today. Now, whether it's in India or even in Europe, I've seen reports that temperatures across summers have been increasing year after year, right? And that's only going to, make this air cooler much more than just a need. Is going to become more than a want. It's going to become a need, and it's going to become a necessity in the future. And that's why I see demand for this segment to increase in the coming years. The second reason is the disposable income that we have in India. Now in India, at least in the last few years, we have seen a steady increase in our disposable income, and that disposable income means that this is becoming more of a need than a want. Right, so that change in perception towards this air cooler space is what makes this segment more interesting. Now, apart from this company is also one of the leading air cooler sellers in the world. In fact, it is the biggest air cooler manufacturer in the world, and also in India, it commands a very good 50% market share. Now, these are some of the reasons why we're going to look at this industry itself today. Now, before we jump into the video itself, another reason that I want to talk about is the reason why air cooler is a much better option than air conditioners. So air conditioners, as you know, comes at a very costly price or very hefty price, and not everyone can actually afford an air conditioner. But whereas air cooler comes at a 30 to 40% discount, not a discount really, but it comes at a 30 to 40% cheaper price than air conditioner. And also in terms of the air that we breathe, because of the air circulation that happens in air cooler versus an air conditioner, the air cooler has a much healthier air that we breathe, and that's why many of the reports say that air cooler is a much better option compared to an air conditioner. Now, whether you're going to buy an air conditioner or air cooler is something up to you, but definitely I think you must think about investing in the stock today that we're going to discuss. The stock we're going to discuss today is Symphony. But before that, in case you haven't, subscribed to my Twitter, I've been posting about Symphony, since December 2020. And one of the reasons why I've been posting it because it has been trading at a very good support range. And since 2017, December 17, 2020, the price has not gone below that level since I posted. And then recently, just probably a couple of weeks back, I also posted about why Symphony looks very good. So in case you haven't followed me on Twitter, it's time to go ahead and follow me on Twitter, because most of the times my updates come on Twitter much faster than on YouTube. So let's not waste more time, and let's get into the presentation. So this is a presentation from symphony.com itself. So it's the website that I refer to, and it has a lot of good information around this segment, why the segment is looking good. And let's look at some of the reasons why we're talking about this company today. Now, one of the first reasons I want to speak about is this company has been there since 1980s, and this company is focusing only on the segment. So they're very niche and they have a very good market share. We'll come to that slowly, but it has a very good market share, as I said. So they have one of the best technologies in the segment, and that's one of the reasons why I feel that Symphony is a good company. And their brand is very well known in US, in Australia, Mexico, in India, and also as part of the de-risking strategy, they're also growing their sales abroad apart from India, so that they don't have too much of jump in the sales. It doesn't become much of a seasonal business, so they're also increasing their business across the world as well. So even if India doesn't do well, some of the other countries might do well, and they might give some good boost to the top line and bottom line. But one thing that I wanted to share today is on the what is the potential of the market that we're looking at in the air cooler space. Now here, if you see, this is the household personal share as each and every component, right? For example, 89% of the households in India have a fan, 11% of the households do not have a fan, but air coolers, 14% of the households have an air cooler and 6% have an AC. So if you had to reach, to around even that 50% mark, if you say every 50% of the household in India has an air cooler, that itself is a very big achievement for this segment. And I feel Symphony, being the market leader in the world and the market leader in India, it can capture a significant amount of share in this space. The other thing that I wanted to show you is the unorganized and the organized market. The organized market, is only 25% of the entire market, which means if the organized players are to get more market share, they still have a 75% market share to capture, right? So even if they capture 50% of the 75%, which is around 32%, I think it's still a very good number, and that could be easily captured if they have a proper strategy and if they can do well in the coming months and coming years, right? So moving ahead to the next slide, also, which is a very important slide from Symphony's website, is the penetration of this air coolers in Indian market, right? So North has 28% market share, penetration levels already, but whereas South has just 5%, East has 4%, probably East might not require that much, but the West and South still has a very significant, along with the North also, there's still a very good penetration possibility there. And I think if you see in 2025, they expected to penetrate from, the penetration numbers are expected to jump from 11% to 25%, which is a really, really good expectation. And I think out of that, a majority of the share would be captured by Symphony. Okay, so that's another slide that I wanted to share. There's one more slide, a few more slides, which I wanted to share, is the de-risking strategy, which I spoke about before. Now, this is a very seasonal business, right? So during summers when most of these sales will happen, and they want to de-risk that, or probably don't have too much of dependency only on selling air coolers in summers, and they are expanding into international markets, and that's going to reduce the seasonality nature, right? For example, in Australia, some of the markets in the world. So previously there used to be a 37% or 44% jump in the quarterly revenues. For example, in one quarter they would do a 100% sale, another quarter they would probably do a 60%, 60 crores sale, 100 crores, 60 crores. So that's the kind of volatility we're talking about. And right now that's reduced to 6%, which means more or less every quarter they're kind of doing a similar kind of revenue, and we can see a similar kind of a growth, or a decent growth in each and every quarter going forward, right? So that's something that I want to highlight. And also looking at the geographical revenues, so I said that this company is also focused in the export markets like Australia and US. So if you look at here, the rest of the world, which is the green, is growing at a 32% CAGR, so which means the sales is increasing at a 32% rate out of India, whereas in India that has still increasing and it's growing at a 9% CAGR, right? Overall, the sales is growing at a 16% CAGR, which is a very good number for Symphony, and it's a very niche market as well. And if you see, the dependency on India is reducing year on year. It's gone down from 80% of the shares to 48%. So right now, India sale is contributing 50% of the overall revenue, and the markets outside India is contributing to another 50% of the revenues, which is a very good share. And even if some of the countries don't do well, they'll still be able to manage that revenue. One more slide I wanted to share is this one. So if you see the revenue breakup, as I said, 73% is coming from Australia, and then we have sales in USA coming from 26%, other exports. So out of the export market itself, majority of sales is coming from Australia, and then US, and then we have other countries as well, right? And then last, I wanted to also show you the financials. So just to see how the company is doing in terms of revenues, operating margins, and the net profit. So it's growing at a decent 16% CAGR revenues, operating margins are growing at 10%, and PAT is growing at 9%. But also let's take a look at the screener.in website, like I always do, which is also very important because it tells you what's the PE of the company, which is very high, and that's what I want to caution you here. I'm not sure historically what the PE of the company was. We can take a look at that here as well. Now, historically, the PE has been very high, around that 84, even touching 100 PE. And off late, it's been trading, somewhere around 50, 55 to 70 PE levels, right? So it's decently valued because a consumer segment is usually highly overvalued, and ROC is pretty decent, 16%. It was around 20% mark, and it's still a decent number to be looking at. So I also spoke about the revenues already, but nonetheless, let's take a look at the revenues over the years. So since 2010, they've gone from 170 crores to almost 1,000 crores, which we expect in the last 12 months, right? While the profits have gone up from 40 crores to 120 crores. There has been some fluctuations recently, probably because of the COVID demand and all that. but overall it's been a pretty decent number. Last one I want to look at is a shareholding pattern. Shareholding pattern: promoters hold a significant share, and then DIs and FIs hold around 15% share, and then public holds around 12%. And within public as well, if you look, there's around 2 to 3% share held by in fact some of the owners' relatives and some other company as well. Right, so that's the fundamental analysis of Symphony. Now, you might be wondering, right, I'm talking a lot about fundamental analysis these days because I want you also to understand what you want to look at in a company in terms of potential. Where is the opportunity to grow for the company? Can it sustain the growth that it's having? And all these questions, it's good to take a look at these numbers as well, so that you know, okay, what's the potential. And when you club this with the technical analysis, you can look at what's the potential targets for the stock price as well. Okay, so that's why I'm diving more into the technical fundamentals of late. And now let's look at the technicals. As usual, I'm going to go to trading view, and I'm going to show you the how did I find the stock first. We're going to start from there, and we're going to look at what's the current state of the stock price, right? So the stock price came again last week in my scanner, and that's why I posted in Twitter. In fact, it's breaking out at new highs. If you see on the weekly charts here, we are breaking out from a very nice consolidation, right? So that's the breakout which happened in the 14th week of March. That's when I posted 16th of March, and we had 2 weeks of sideways, and now it's again heading higher, right? So it's pretty good breakout as well, coming from volumes. So I found this because CCI is crossing 100, which is my primary scanner. But always let's take a look at the monthly charts first, and then let's go ahead into the weekly charts again, right? So overall, if you see, this company was listed back in 2010. It went up from 90 odd levels to almost 2200 levels, and it's been consolidating since 2015. It's been consolidating, so almost a 7-year consolidation which has been happening in this price. And if you just take a channel, and I'm going to draw a channel here, I'm just going to that point and that point, I'm just going to drag it. I'm going to connect this point over here, this range over here, right? So if you see, now you might have your own ways of drawing charts, and you can have a completely different view. Trend lines are very subjective. It doesn't matter how I drew it. Based on my experience, I see a parallel channel here, and I think that the stock is now completed the time correction. It has been going through very strong consolidations the last 2 years, and now the stock is breaking out, from that consolidation phase, right? In fact, it had a breakout here as well. If you see, it had a breakout back in December 2020. It went up, then it again came down. It didn't break the previous lows, which is a very good sign. And now it's kind of headed higher. Okay, again, we are seeing a breakout here. So if you see, since July, almost 6 to 10 months of consolidation, and now it's again breaking out. And if you see the volumes, right, the volumes have been fantastic since that December 2020 breakout. It has been a strong accumulation. I'm not sure by whom, but definitely that's a very strong sign of accumulation. And now probably we are done with this accumulation. We're going to head higher, right? Now if we jump into the weekly charts, now that's very clear there, that we are seeing a breaker and we are heading higher. Now remember that I always look at CCI. CCI has crossed 100. It's now at 212, and also the strength also is picking up. Relative strength is also picking up. We had a spike here, but then now again relative strength is picking up, which means the stock is performing much better than the benchmark Nifty, which I'm using here, or CNX 500 also you can use. And it's performing much better, and that's one of the reasons why I have a very strong conviction that this probably is going to head higher from here. Now, since the stock has been going sideways, now what I'm expecting is that the stock might head higher from here. Probably it's going to head towards levels of 3000 in the long run. Now, long run is mean this can be in the next 5 years, next 10 years. I have no idea when it can reach the 3000 levels. If you're looking for targets, I'm not that person who really relies on targets. I rather ride trends, and I'll make a video on why you should be riding trend. But today, what I want you to know is that you can buy the stock at current market price. So it's been consolidating for the last 4 days. You can buy the current at current market price and keep a stop loss, around 1050 levels, right? So that's going to be the stop loss here. Around 1050 levels, you're going to keep stop loss. Now that's a stop loss of around 10%, around 12% stop loss, and we're going to look at the immediate target that I'm going to look at. I don't know when exactly, but the immediate target we're going to look at is 1500 levels. So that's around a 30% return that I'm looking at for a 10 to 12% stop loss, which is 1:3 risk reward ratio. So I'm looking at this level, right? So if you look at this level here, so that's the level I'm looking forward to for the stock, right? So we might see some resistance around this level. So it can reach levels of 1500 to 1600, and then it might consolidate here sometime and head higher. So do not sell off the stock once it reaches that level. You need to wait for some time, see what happens here, and if it heads higher, then it's a very good sign, especially if the sales this year are going to do well. because the heat is very high in India. That's what I'm hearing. And if it breaks out, it can get much higher levels. Okay, so that's the stop loss. So keep a stop loss of 1050, buy at current market price, and allocate around 5% of your portfolio. If you want to, if you know technical analysis very well, then you can go ahead and allocate even much higher allocation, probably 10% if you want to. But that comes with the risk. It's your risk appetite that I'll not interfere in that. So buy at current market price, stop loss 1050. We're going to look at least 1500 levels to 1600 levels, and it can hit much higher as well, probably into new all-time highs in the next few years, right? Depends on how the market is doing, how the stock price, how the company is doing as well. So that's this analysis I wanted to do today, Symphony. So if you did like my analysis, don't forget to subscribe to the channel, and I'll see you in another video. Until then, take care and stay safe and trade safe. Bye bye.